Hi, welcome to another episode of Startup Strides. I think it's episode 70 now, and it's a very special, very exciting episode today. I am joined by Jeff Crusey. He's a general partner at IceNine Venture Capital and a first-check investor in deep tech, backing companies across space, defense, and other frontier technologies. And what stood out to me on your LinkedIn, Jeff, was fail we may, sail we must. Welcome, Jeff. Really happy to have you on.
Oh, thank you for having me. I appreciate it.
I'm gonna jump right into the questions. I don't want to waste any time. And what I like to do, I always like to start with a bit of a background question. You have a very interesting, career, and I'm curious what drew you into the world of venture capital in the first place. Especially what pulled you toward deep tech in the current age of AI boom.
Yeah, absolutely. I when I graduated college, I went into banking. I came out of an undergraduate business program, like a lot of my classmates. I went straight into banking. The other options at that time were largely consulting or trading, and it was when I got to banking. I think I I quickly learned I don't really care about leveraged buyouts. I was always gravitating more towards the earlier stage businesses that we were working with. And I honestly I wasn't even really aware of venture capital at the beginning of my career until talked to a few venture capitalists and I'm like, oh, there's this little cottage industry over here that gets startups off the ground. And that's what becomes these big companies eventually. And that always seemed more interesting to me because in banking, I felt like I was skimming value off a transaction. And in VC, it feels more like we're helping create value, which is more interesting to me. And so that was sort of the main reason I started to look at VC. And then it was 2008, so I knew my banking job wasn't going to be around much longer. And I figured that the federal government was going to put a lot of money towards energy tech, trying to do this, energy transition. And so and that was an area I was deeply interested in. I'd built my own battery banks, put up my own solar panels. And so I thought, hey, maybe I'll go try my hand at that. And in 2008, joined DTE Energy Ventures, focusing on energy tech initially.
That's how you started your VC journey. And at any point, looking at your LinkedIn resume, let's just say that, right? Like you doubled down on that deep tech interest. You just went after, space tech, deep tech. What made you stay? I understand it being attracted in the first place, but what made you stay?
So it was my years in energy tech VC were very formative and kind of set the stage for the next basically 20 years of my career. It really started when the first company I looked at, I was asked to look at a solar panel company. And at the time, a lot of VCs wanted to invest in these companies. And I get why, they wanted to be part of the value creation of this energy transition that we're going to have to cross at some point. However, it wasn't lost on me that China was waging economic warfare on the US. They were subsidizing their panel manufacturers well below cost. So they'd price them just under Western competition and take them out. And that's largely what happened. I raised my hand back then, pointing this problem out. I don't think anybody back then wanted to hear about it because globalism was the mantra of the time. But my primary concern wasn't for that particular investment. It was actually for what I viewed as, like I said, economic warfare that had long-term consequences, where the U.S. was essentially giving up their technical advantage unwittingly, and they didn't really do anything about it for more than a decade. But I knew they were giving away their national security, and nobody else seemed to care. I mean, even Mark Andreessen was talking about software eating the world when I think they should have been turning focus a few decades ago, and they didn't. And I personally believe a lot of the investment we're seeing today in deep tech is kind of paying for our sins back then. We're playing catch up now, and so for me, it's a lot of fun because this is where I planted my flag, where I stayed in. I operated in a lot of different startups in these categories. Um, And I just knew at some point there was really no choice. We would have to come back to all these categories. So I just prepared myself over the next, 10, 15 years.
A good venture capitalist is a sort of like a prophet in a business world, right? So in a way, your prophecy is very right. I mean, looking at the trends right now, there's a massive revival, which we'll talk more about later on, about of the manufacturing capabilities of national resilience. But I guess before we even go in that direction, I want to clarify deep tech for the viewers who might not, might have heard of it, but don't exactly know, because deep tech is such a broad term, right? It covers semiconductors, fusion reactors, space tech, you name it. What kind of deep tech companies, technologies really excite you and why?
Yeah, aerospace and defense is one of my strengths and specialties. I think if you can't defend your country, then there's no sense in investing in any other category of VC. So I think that's sort of the primary focus today, especially given the current geopolitical climate. Uh, but but I think there are a lot of other categories that contribute directly to that. And AI and energy infrastructure absolutely contribute to that. And I think about security in very broad terms. Uh, so manufacturing, I do think, is a part of that because we need to rebuild that tribal knowledge and how to make things again, because a lot of things we forgot how to make. And then, a lot of people don't know this, but, I started my career focused on biomedical technology. And I even think there's a large security aspect to healthcare that doesn't really get talked about a lot. Um, so that's another area that I'm turning my focus back towards, especially because I'm finding reasonably priced deals there compared to AI and defense and all the sort of shiny object categories.
Weirdly interesting enough, biotech is not one of the core kind of focus areas of this administration, whereas other tech areas tend to be. When you say biomedical technologies, is there like a certain is it like pure biotech play? Is it more platform technologies, or is it different kind of like medtech device? What's it that interests you?
Medical devices,
Medical.
surgical platforms, but even pharma. My family used to own the largest West Coast clinical research organization, and we spent many years, understanding what's going to work and what's not. And again, I think there's a lot of security that goes in that. I mean, COVID is just a good example of where healthcare plays, an important role in health in security.
So right, and not only in healthcare disruption causes supply chain disruption, which causes further disruption. So it's all interlinked. Um, there has been a huge rise, resurgence of funding and interest in deep tech. I mean, especially fusion has been something, even in Europe, getting a lot of funding. Still, though, I'm curious, as somebody who's very entrenched in the space, who sees deals, who sees trends, how does it compare still to the capital being deployed towards pure AI play?
Well, I mean, I think it's hard to overlook the magnitude of the capital that's going into AI.
It's fair
Um,
enough. Yeah.
yeah, I mean, but even defense went from like a couple billion to like almost 20 billion this last year. Um, I don't think that comes anywhere close to AI though. So I think they're sort of king of the hill for right now.
And do you see that changing, or do you see this AI kind of hype continuing for a while?
I mean, I think it's a lot of hype right now, honestly.
Mhm.
I mean, maybe not after Mythos. We'll find out. That could have just been marketing. But I look at a lot of AI today as largely a consumer application. And hopefully we'll get there in the future with other models. It's not to say that transformers are the end all be all. I don't believe they are. So I still think it's actually pretty early days with regard to AI, and we have a long way to go.
Joe, what I'm curious about though is the funding mass kind of breaks down, right? Like you look at this, so much capital being deployed, and you would before you would invest 500K in Facebook and get $2 billion returns, right? Now it's like you put in billions and billions and billions, and the VC stakes get diluted. So, like, how are people thinking of this VC mess lately?
Yeah, I think there's a lot of different philosophies in VC, And it's not to say that any one of them is absolutely correct. And so, one school of thought is that if you don't participate in the AI revolution financially, somehow you're just going to get left behind, because that's where all that value is going to aggregate at some point. So you should be willing to pay any price. That's one school of thought. Maybe there's people out there that don't really think the models have a lot of economic value. Um, my personal view of it, is that the models don't actually have a lot of economic value. That there'll be a better one the next week and a better one the next week, and somebody will bring training costs down and become more competitive. And that's what I fully expect at some time, if we don't entrench these companies too much, which I think would be a mistake, because it's like saying pets.com during the .com revolution was the end
Yeah,
all be all, and like definitely
yeah,
wasn't. and
yeah,
and so I think where I'm more interested is at the chip level, and I think more of the value actually aggregates there, and why I've kind of stayed out of investing in any kinds of models. And that was because I'd kind of seen this play out before in a smaller way in the geospatial world in defense, where a lot of teams, they use AI to analyze the imagery to do different things. And I had seen this constant churn of analytics companies that were using AI, and the next week there was a better model, and then the next week there was a better model. And, these companies would, raise money and disappear, every couple of years.
yeah.
And I feel like there's a very similar dynamic going on there. And the models aren't where that value really aggregates in the end. They seem to be great at raising money, but yeah.
Yes, very good, very good. There's a bit of a fear from the people I talk to, some conversations where defensibility of startups, people saying next model update might erase my startup out of existence, right? Do you think that will continue to hold true, or do you think there's going to be a point where actually, as you said, these models will not really have much value and you'll need very hyper specialized kind of solutions? And what's your take on that?
Um, so, gosh, that's a good question. My view of it is, we'll continue to see this churn. However, financially, these companies will entrench themselves. So it'll be kind of up to those companies to sort of break the seal on what could be next. The challenge, I think, is, they've picked their model, and it's not an easy thing to just transition away from. So there could be creative destruction on the horizon for some of these businesses, where maybe a more efficiently capitalized company can beat them out at some point. I think it's going to be very interesting to see how OpenAI plays this, because that would be one hell of an IPO, for a company to do, given where they are financially today. Like, I don't think they could. So, I think we've got a long way to go still to see how that really unfolds.
You very quickly, you mentioned you're very interested in chips. Is it the new chip design, chip architecture, or new? What is it that interests you in chips?
Yeah, there's things like adiabatic or reversible computing that are really interesting to me. They are approaches to computation that are dramatically less power hungry for different reasons. Um, and and that's interesting to me, because we've largely hit a wall, or we've plateaued with x86 architectures and RISC-V architectures. And so we're not really eking out any more efficiency from those chips. And that's why I'm starting to turn, well, I've been looking at alternative chip architectures for almost a decade now. But that's why I think we need to start heading in the direction of new chip architectures, just because we don't want to get stuck with an architecture that's not providing us any pathway to more efficient computing.
What I found interesting with chips is that turns out I remember reading about this startup, and I read about it a long time ago, Astrus AI, and it was very much analog chip design. Turns out quite significant amount of it is very manual, and there's a very limited number of engineers that can do that. And it's, and even in AI age, like those kind of things still being very manual. It's very, very interesting. One thing about deep tech startups, though, and which has been historically a challenge, is the lack of patient capital and long term kind of investor view, alignment, patience. And from a conversation I've had, especially with some of the episodes, and that was a bit more pronounced in Europe. It seemed, the European startups would turn to American investors for funding. It is a bit changing now. Do you think that's still the case, or and if so, how does this traditional venture playbook needs to evolve in your opinion?
Yeah. So in terms of how the venture playbook needs to evolve, I think there needs to be like a whole new generation of VCs, honestly. Most VCs today, their background is software as a service investing or healthcare, which has nothing to do with deep tech. And those playbooks don't apply, period. And it's frustrating for me because I constantly see other VCs that don't have any of that background trying to apply sort of a software playbook, and it comes off in like really weird ways. Like, oftentimes, um, you know, companies might be generating revenue to the point where they're throwing off cash. And why would you go do a $300 million equity round when you could optimize your capital structure better and actually have a healthier company? And I think that largely has to do with just like, a lack of financial literacy and financial skill sets, let alone, like understanding the actual technology you're investing in. And that's why I think we see a lot of like big splashy rounds today, because they're trying to price it in all up front when, they don't even have like a good idea about like the next 5 years either. And that's to sort of synthesize what looks like a success before it's actually happened. And I see that all over the place today. And I get why people do it, but I think it's a short-term incentive that they're taking, and it ultimately doesn't play out very well. It turns companies into sort of like binary trials at that point. They either, meet the milestones and raise the next round, or they die on the vine. And I think we're going to have a lot of companies that are very well capitalized that are just walking zombies for a while because of this dynamic. Um, and then, in Europe, I don't think we see as much of that. I mean, I, I think what I see in Europe is a lot of mimicking of what is observed over in the US. And so, that's why like defense was cool 2 years after, it really took hold in the US and things like that. So it's just kind of mimetic. And so like whatever you see in the US will eventually happen over here to some degree, not the same quantum or scale or magnitude, but you know, it's just kind of how people are.
Is there any company you have in mind that managed to do it in a healthy way?
In a healthy way. Well, I mean, yeah, there's definitely companies that have done it in a healthy way. I think IceNine has done an amazing job at building that business. Like Rafael is just genuinely one of the best founders I've ever met in my entire life. I have a lot of respect for the process and thoughtfulness he built that business with, and it shouldn't surprise anyone that it's one of the strongest satellite imaging companies out there today. I mean, the US is buying their satellites, like to give you an idea of like how valued their technology really is.
That's so cool. Um, the issue with deep tech, though, Jeff, and you know it better than I do, is that the same way in a software, you can just prototype, right? You can just do a quick prototype, a proof of concept, pilot, get early traction, have a wait list, you can just do those things, uh, often. And the capital intensity is quite high. Uh, Beyond the team, obviously, founding team is the most important, especially in deep tech. But that's kind of like a common knowledge. I mean, that's a thing. In every startup, really, founding team is very important. So beyond the team, what actually gives you the conviction to write that first check and across such different domains?
I mean, a lot of it still comes back to the team, but I think I scrutinize them a little bit more than most on the tech side, and that's because especially in hardware, your design decisions have repercussions, for a long time. It's not like software where you can very quickly go back and fix it. sometimes you're set in a design. So yeah, beyond the team, I really do scrutinize the tech. Like I want to make sure they're making the right design decisions because, like I said, they have repercussions down the line. A lot of times I think investors will overlook unit economics, which, oftentimes that's what the basis of the company's business is. If you can't sell electricity at $1 per kilowatt hour cheaper than what people are getting off the grid, then nobody's going to care. And so, I really do get in the weeds on the tech, and unit economics and, the development roadmap, what subsequent iterations could look like. And then, I really do connect that to their go to market, and a lot of other things. But, I really want to know that they have a good idea for that in their head already. And I'm not saying they have to have the right answer, but, I want to know that they've spoken to, the key protagonists within their field, or at least they know who they are and potentially coming onto their team. I want to see things like they have that ability to bring in real talent, because the founding team is important, but like how they build the team is just as important ultimately. And so, it's not unlike a lot of what a lot of other VCs look into. I think I just take an extra fine comb brush to it.
Some VCs prefer hands-off approach. Some VCs prefer hands-on approach. And I know there's no single formula that works for everybody and for every startup. But what's a good level of VC involvement in such, in the tech areas you invest in?
I try to subscribe to the philosophy of lead, follow, or get out of the way. And, oftentimes I'll invest in a company and there's nothing I'm going to be able to do to really help them. And because they are that solid of a team and they don't really need any help. And that's okay. Like I don't feel weird about that. Like if they've got it, awesome. Other times, a company will need a lot of support. Maybe it's a first time founder who's never been through this before. And so, I really try and modulate it based on the needs of the company. But ultimately, I don't want to get in their way or slow them down. That's my biggest concern. And I think that's my biggest concern because I've watched so many other VCs, especially in the UK and Europe, really try and insert themselves with too much process, overbearing board meetings for a pre-seed company, things like that. And all it does is slow founders down and give them the wrong idea about how to build their business. So, I wish more people would subscribe to this idea of lead, follow, or get out of the way, because controlling your startup doesn't make it a better company ultimately.
That's a very good point. That's a very good point. I guess when you think about exit opportunities, then do you think is it important that founder has an idea or how they want to exit the company from the get go, or do you think they should kind of figure it out along the way?
Well, I don't think founders need to put a ton of thought into it initially. I think it's good to have some notion of where it could go eventually, like that there is some possibility for an exit, but like there's a million miles between day one
Yeah,
founding and an
yeah.
exit. It's like you can't predict that on day one ever because your business could look completely different even a few years after that. So I think it's sort of wasted effort and time to spend tons of calories on figuring out what your exit's going to look like, at your pre-seed round.
Jeff, I have a question about an investor profile, which I'm going to ask now, um, because you mentioned something, and I think it ties very well into that question. But you know, the space you are in, the space you invest in, is such a unique space. I mean, a software startup can be like a 18-year-old college dropout can start something, is there better? But like an orbital defense tech startup, like how do you come across these founders? Where do you find them?
Um, so, yeah, I mean, that's a great question. And actually, it's pretty straightforward. You find them in the government because the only people working on this before were in the government. Nobody else was working on this. There's no reason to. There was no industry or market for it, really. In across Western allied nations, there's basically no orbital defense. Period. We're kind of flying naked right now. So in the U.S., I put a check into True Anomaly, and the way I found them was I literally just started figuring out who's writing the orbital warfare doctrine within DARPA, and it was that team that eventually formed True Anomaly. Similarly, I'm working with Shield Space here in the UK. These gentlemen came out of the military here in the UK as well. Um, I think that's probably where you're going to find a lot of those types of individuals. I think it's a lot harder for folks that are kind of outside of that ecosystem to make serious progress. And that's because at the end of the day, and I hate to say it, a lot of defense business is still very relationship based. And if you don't know who the contracting officer is by name, you're probably never going to get that contract. And who better than the people that are already working within the same building as them?
Fair enough. Can't argue with that logic, right? You work across both US and UK. And I believe you're based, if correct me if I'm right, you're based out of London, right? Um, there's a strong, I mean, especially lately, there's a strong private sector, private market, public sector collaboration in US. There's a strong focus on national security resilience. And obviously a lot of these defense tech startups get quite a bit of, interest and attention and funding. Um, how is it in Europe though? Like, is it lagging behind? What was your decision to move here and not stay in the US and continue building it there?
Um, well, I very well might go back at some point. My wife's English. That was, the big reason we moved here. And I've got some family out here. Um, but yeah, it's a bit frustrating, honestly, because, I used to be at Seraphim Space, a fund here in London, and I spun out to do defense because they couldn't. A lot of funds couldn't do defense. And I would say most people that are investors in Europe and UK in defense or space really don't have much experience at all, on at least on the technological side. Maybe they were in the military, and that's fine. That doesn't really help you in terms of evaluating technology companies that much. But maybe customers. I don't know. But I just think it's really hard to talk about technology without really understanding technology, and I just don't see that across many funds really. So I think it's lagging behind, and I think it's going to lag behind for a while because like it's just like you're not going to make good investment decisions, without the right people making those investment decisions. I just don't think we have a lot of the right people doing that now. There are a few, but it frustrates me when I talk to people and they're like, "Look at this great radar company." I'm like, "Great, what band is it?" And like they don't know, and it's like, how can I take it seriously then? Um,
Interesting.
so I think there's a lot of maturing that needs to happen still in the European defense market specifically. Um, I would also say it's really weirdly performative. Like it really is, and it bothers the hell out of me because like these are startups. Like, why are you throwing these like big galas and huge conferences, spending tons of money? Like Helsing's, like they threw this like crazy party one day, and I'm like, what about your technology? Why don't you go waste your time and effort in that instead of like all this like performance? So like it's the one thing about defense that kind of bothers me a bit. It's very performative. Like I don't remember seeing all these like crazy videos with voiceovers and music in them and bombs exploding and stuff. Like this is like what are we doing here? Like that's kind of silly. So I think it's like it's just sort of a symptom of what I described earlier. So yeah, I think we've got a lot of growing up here to do still.
There was a bit of a notion of dual use technologies though lately. I mean, I would open Sifted and I would see some and and dual. I don't. What do you think of dual use technologies when the technology might have can serve both commercial markets and defense markets, but they both require very different go-to-market strategies. Like, what's your take on as an investor on dual use technologies?
I think that the idea of dual use is kind of silly because I think you almost pointed at it yourself. Like, why would you send a company on multiple different paths simultaneously if one of them you need to capitalize on before the others? I think dual use probably came from the VC ecosystem, from risk averse VCs that wanted to sort of they thought they were mitigating their risk by saying a company had to do both defense and commercial. You don't really hear that anymore in the U.S. I still hear it out here. So I think whenever I hear that, I think just risk averse investor.
I think there's also a bit of a taboo around just investing in defense. startup. So I think calling it dual use makes it softens the blow a bit. Let's just say that, right?
I wish people would get off of that soapbox, really, because you don't get any of your other apps if you can't defend your own country. So like being against defense doesn't make any logical sense.
Very fair. Building on that, and also building on what you said about early, like relationship building, the go-to-market strategy in your line of business is gonna be very different. I mean, you can just cold call somebody and be like, "Hey, I'm selling hypersonic weapons. And like, are you buying it?" Uh, how should founders think about and investors should think about go-to-market strategy when building and investing in these companies?
Oh, that's a hard one because there's so many different kinds of businesses with different kinds of strategy. But if we're talking about defense specifically, I think like I said earlier, a lot of it's still very relationship driven because, the government has to trust you. The person who's buying it for the government from you has to trust you. It's a much higher trust environment to move technology sales. And so I think the companies that I've seen do the best are the ones that really understood this aspect and they brought on team members that really already owned those kinds of relationships before they were even on the team. They weren't starting from a cold start, and that's because otherwise it would take quite a while to build that kind of trust. And I think a good example is SpaceX or Anduril. I mean, it wasn't like they founded the companies and right away the government was asking them for their products. It took them a long time and a lot of convincing. I mean, SpaceX even had to sue the U.S. government at one point. Um, and and so the best way to shortcut that relationship is to bring the people in that already have those relationships.
So in a way, lobbying becomes an important part in this process where like you have.
Hugely, hugely important. Sorry, I didn't mean to interrupt you.
No. I want you to do you want to say more on that in terms of like what do you think of lobbying?
Yeah, I am. The data is very clear to me. When I look at companies that go through, sort of the emerging defense technology paths. In the U.S., it's this SBIR, Small Business Innovative Research Grants. In Europe and UK, they have similar things, but I think it's when when you start that effort, that's exactly when you should start your lobbying. Because I've looked at the data, and when I go back and I look at Epirus, Shield AI, Anduril, Palantir, what did they do differently than everybody else? They started lobbying from day one. From the second they started applying for grants, they started lobbying. And so the companies that started lobbying earlier got to revenue much faster than their counterparts.
This might be a bit of a dumb question, but I still want to ask this. When you're building something like a defense tech startup, tends to your only customer tends to be government, just one customer that you hope that will consistently pay for your product, right? And as you said, a relationship is quite important to manage to maintain those relationships. Like, how do you think about that commercial relationship in a more sustainable way when your only customer is just one customer, really, one government?
Well, it might be one government, but it's typically never like one entity within that government. Oftentimes, it's multiple different entities that are disparate, so they're separate from one another. So it's not as if like you've got one person you're
Yeah.
talking to in the office. So usually there's opportunities across different agencies, and I think that's fairly true, across the U.S. and Europe.
So even if you're selling in the Pentagon, there's multiple different divisions
But
within.
yeah,
Yeah. Fair enough.
usually, I mean, there can be like very specific technology that's
Specific,
only
yeah.
going to have like one customer. Um, like if you're building boats, typically you're selling to the Navy, right?
Fair enough. One thing really that caught my attention from what you said was we need a new generation of VCs. And I feel like I want to flip a question to you, right? Like we often think about what a good founder profile looks like. It's PhD in quantum physics, ex DeepMind, ex SpaceX. Um, So on the flip side, what a good deep tech investor profile looks like, and for young, aspiring deep tech investors, how they can go ahead and build an edge in this space.
Yeah, I think I really do believe in VC. There's more than one way to win, and there's more than one strategy that can win. So I think, in terms of, finding success in deep tech VC, I mean, one way is to know more than anybody else. So that's not just technical though. That's like you have to know, the who the investors are that are interested in this category. You need to know them by first name, and you need to be able to move quickly between them. You need to be able to, underwrite with conviction, maybe without anybody else participating. And the idea is you win because you have better intelligence and insights, so you can write earlier checks and beat consensus. So everyone else has to mark you up. So I think that's one way to win, like knowing more than everyone else. But maybe you weren't a physics PhD. Maybe you didn't get to work at I don't know, SpaceX or something like that. But you can still find success as a VC. Sometimes that's, learning how to buddy up to some of the bigger funds and become sort of a feeder for them, and, tag on to their rounds with them, because a lot of times you can get some really big fast markups by tagging on to, a mega fund round. So that's one way to, get a lot of attention very quickly from people, because LPs love those kinds of investments. They don't typically like the really early stage investments because it's hard for them to understand until there's like 100 other people around the table saying it's a great company. So, that's another way I've seen a lot of VCs find success. And I think those are just two basic examples, and there's a lot of other ways. But yeah, I'll not bore you with the rest of them.
I'm not bored, and I'm actually surprised that we're coming towards the end of our episode because I didn't even the time just flew by. I'm enjoying this conversation so much. I guess I'm gonna ask you my final question, which is I've kind of danced around it, but now I want to focus on that, which is IceNine, your VC fund. And correct me if I'm wrong, but I think the name IceNine comes from novel cat's cradle, and it's a substance that restructures everything it touches, right? So, what are you trying to build with IceNine? What's kind of the IceNine technology you believe could fundamentally reshape the global industrial base over the next decade?
What I'm trying to do with IceNine is reindustrialization. I think Western nations desperately need to remember how to build things again, because if we can't, then we're kind of useless in terms of value in the future, and our competitors will race past us. So, I desperately want, Western countries to start making things again. Like, just like build your own stuff, like get energy costs down, deregulate. Because we're kind of at the beginning of a new super cycle. I think Mark Andreessen's right. We are at the precipice of this whole new era of technology right now, and technological sovereignty is kind of at stake as well, and that's my other main concern here, which is, I don't want to live under somebody else's rules. Like, I like the rules I live under now, and if we can't maintain our technical sovereignty and dominance, then that might go away in the future. So that's really what I'm trying to do with IS9. What was the second part of your question?
I guess, I mean, you kind of answered my question, and maybe to close it off, I can ask, what are some of the exciting startups you have either invested in or, looking to invest in?
Yeah, yeah. So I think your question was like, what is like the technology I think is going to
Yeah.
restructure everything else? I think we've not made a ton of great progress in the energy industry for a long time. I think a lot of that has to do with ridiculous regulation that countries are still holding on to. When I got into VC in 2008, I looked at every single small modular nuclear reactor company there was. I passed on every single one of them. And that was because I knew the regulatory pathway was in excess of 10 years just to be able to turn your reactor on. And I wasn't going to take that bet as a VC. I mean, like I don't think anybody should have. And most of those companies, never got to turn their reactors on and went nowhere. as a result. And that was only to do with regulation. That had nothing to do with the quality of the technology. There are tons and tons of safe, small modular nuclear reactor designs that we never deployed, 20 years ago because of regulation. If we can start to change that, and it looks like it is, at least in the US. I mean, there's some more helpful regulation over here too. But if we can get better about that kind of regulation and stop slowing down our innovation for needless fears, then I think we'll really see a big evolution of what's going on in the energy industry, and I think that alone restructures everything. I mean, we can even kind of say energy is restructuring everything right now with what's going on with the Strait of Hormuz, right? So I think that'll be one of the most important aspects of technology we need to really figure out in the next decade, if we want to carry on through the super cycle.
Well, I guess I'm coming up with questions as you're saying stuff, but I guess one of the final questions would be, what do you think of fusion energy? Because we've been, this is kind of a bit of a joke, like we're 30 years away from fusion energy, and it's been for decades like that. Do you think we're coming close to that now, or?
I do. I think, I grew up in San Diego, and I used to go to the General Atomics Fusion Development Lab at UCSD when I was a kid, where my mom worked there at UCSD, not in the fusion lab, but so I had a weird amount of exposure to all of that at a young age. And then when I got into Climate Tech VC, I went back and I looked at it again. But I thought there were still all of the same endemic issues back then that I've seen today. With tokamak reactors with magnetic confinement fusion, I mean, there's CapEx issues, there's radioactive waste and fuel issues that's expensive and hard to handle. And then nobody talks about the fact that this thing's never made a positive net energy balance ever. And so, okay, that doesn't really seem like a feasible path forward. Maybe for research, it's great, but for grid parity electricity, probably not. We have laser confinement, but I would say there's actually a lot of similarly endemic issues there. Most of them are still using tritium, which is very expensive, hard to handle. A lot of folks don't talk about the fact that when they turn these machines on, they kind of blow part of the machine up every time they turn it on. So it's not like you're getting base load. You're getting one massive reaction that destroys part of the machine. So your turnaround time is, it takes days to rebuild that thing. So again, not in line with base load or grid parity electricity in any way. And by the way, those diodes are really expensive and only a few fabs make them. And, there's all these other issues. And then, similarly with Z-pinch or the Z-machine approach as well. I think companies I shouldn't say any companies, but, still deuterium, high CapEx, blow part of the machine up. But I'm glad you asked the question, actually, because I don't know, about a year and a half ago, I actually incubated a fusion company here in the UK that's in stealth, so I won't say their name. But it solves all of those endemic issues I was referring to.
That's so cool.
Yeah.
That's
So,
super exciting.
I mean, we got a long way to go, but it's the first time in my career, in my 20 some odd VC career, that I think there is a feasible approach to fusion energy that could provide grid parity electricity.
Jeff, I promise this is my last question, and with this I end. But energy is very important, especially with the energy demands that the new technologies, the AI technologies require, and with everything else too. But another saying, which is also tied to national resilience, has been the key theme has been the rare earth minerals. As there's been quite a lot of emphasis and focus on mining and finding new sources. Do you think there's a better way to go about it, or do you think it's any other? I think somewhere I saw you mentioned something about circularity of recycling minerals.
Yeah. Yep. Yeah, I think, I actually think the real bottleneck isn't the mining. And I think people kind of dance around what they're actually trying to say, which was they're concerned about the refining bottleneck in China, is what they really mean to say. Because 90% of it is done there today. And having access to those refined materials will become challenging if you're not in good, if you don't have a good relationship with China. That could really spell problems for a lot of countries at the end of the day. Um, so, um, so I think refining is really the problem that everyone's pointing to, not stockpiling. You can stockpile all you want, but it's useless if you can't refine it. So it's like that's the real issue. Um, I think there's a few different ways to address it, but one of the ones I think gets consistently overlooked, and I'm not sure why, is recycling of e-waste. Most of it is, I think it's like 40% of it in the U.S. is it's just thrown in the landfill. Um, Less than 10% of some of it gets recycled, and then another good portion of it gets shipped overseas for who knows what, probably just landfilled or something like that. Um, so so we recycle almost nothing in the U.S. from e-waste, which is full of rare earth elements and critical minerals. Uh, and by the way, it's not in a mine. It's already refined to a degree for you. And by the way, it's almost all located in big cities. So it's like, what are we doing? Like, we can close this loop eventually if we actually start recycling it and if we can do it at unit economics that makes sense. And it turns out we can. Like, we've known this for a long time. I just don't think it's getting much attention because it's not the sexiest business in the world. It's not a hypersonic missile, but it can make a lot of money. So, I think people really need to start looking more closely at scaling e-waste recycling to close that dependency at some level, unless you want to remain dependent forever.
There might be another startup opportunity here, huh?
Potentially.
Jeff, it's been a pleasure talking to you, learning from you. So very much appreciated. Thank you so much for your time.
It was a lot of fun. Thank you.